Welcome back to CNBC TV 18, and you're watching Midcap Multibaggers. With us, we still have Mr. SP TULSIAN, PRAKASH, DIWAN, AMBAREESH, BALIGA, as well as DEVEN, CHOKSEY. We've given you 4 picks. We've got quite a few more picks. So let's start off this segment with a bit of a sweetener. Let's go across to Mr. TULSIAN and let him tell us what he's picked now. Mr. TULSIAN?
That's right, Nigel. In fact, I have been, taking a positive call on sugar stocks since the start of the crushing season in the month of October. And since then, if you see these stocks, they have already shown a growth of about 300 to 600%, almost treble to 6 times, increase to 6 times. And it's still, when you see the reaction of the people, they seem to be circumspect that maybe this rally may not last or, go forward from here on. But I'm keeping a positive bias. And in that category, I have picked up Balrampur Chini for the simple reason, if I just give you the quick fundamentals, the company will be posting its highest ever profits in the history of the company. The theme which I have chosen for today's stocks are that all these companies will be posting probably the record profits which they have posted in their lifetime. So that is the theme of all my stocks. So here also Balrampur Chini is likely to post a PBT, profit before tax, of over 400 crore for the for FY17. And if you take a call only on Q1, last Q1 they had a net loss of 75 crore, and I am expecting this time to sign to get changed. Minus 75 will become to plus 75 crore in Q1. For the simple reason that company has sold 19 lakh bags of sugar, which were valued at 27 rupees on 31st March. The average realization in the quarter to them were at 33 rupees per kg. Going forward, they are holding 38 lakh bags, which will also get sold in the next 2 quarters, on which the unrealized gain is closer to about 300 crore. Their distillery and cogen business is seen to be very much in place, which will keep contributing to the EBIT at the EBIT level of about 350 crore. And if you see the company declared dividend of 2 rupees, that is 200% in the year 2013. But because of in spite of the better working seen in FY16, the company did not declare any dividend because of the loan conditions. And now it has learned that the company has sought the exemption or maybe the permission from their lenders, and maybe along with the first quarter numbers, we may see company declaring interim dividend of 200% as well, that is 2 rupees per share. So taking all this into consideration, the positive bias on few of the sugar stocks continues even for next 6 to 8 months. But yes, specifically on Balrampur Chini, one can take a price target of 150 rupees in next 2 months. I'm giving all my targets for next 2 months, but the positive bias continues to remain for the next 1 year or so.
Okay, so about a 15% upside seen in Balrampur Chini in the next 2 months, but you could hold on to it for bigger gains for the next 6 to 9 months. Very, very sweet gains for all the sugar stocks. But let's move on. The next one on our list is a pick by PRAKASH DIWAN. PRAKASH, you've picked Orient Paper. This is a Birla Group company. In the past, they monetized value by demerging the cement business.
Right.
From here on, what's going to be the trigger?
Yeah, so, so that's more a work in progress, clearly, Rima. They've used the proceeds from the cement demerger to repay a lot of debt, and that's really helped the company's balance sheet become much smarter. In fact, recently, the rating agencies moved their paper in terms of rating 1 notch up, which is a very clear validation of the improvement that's underway. The best part about this business was that the parent business, which was till date struggling, has started turning around. I mean, it's into a wide variety of paper manufacture, writing, printing, specialty paper, industrial paper, and they also have a tissue paper unit which has started turning profitable. And mind you, the margins in tissue paper are much more than the conventional paper business. Now, what is the company doing with all the good news that it has on the paper business? They're utilizing that strength to focus on the consumer electric division, and that, I think, is going to be a huge story in the making. The moment, and Orient is known more for Orient fans. They were the pioneers of what's called the PSPO technology, which is now across the industry. And they are one of the largest manufacturers and exporters of fans from the country. 60% market share is what they claim. And not only that, they've got into, from fans, they've got into LEDs, luminaries, they've got into appliances like toasters, mixers, grinders. So, they've used that brand salience to rub off on other products, and that diversifies the consumer electric business in a very significant way. My sense is the turnaround started last year. In fact, this was a candidate, I'm sure Varinder would have been tempted to put it on your earnings pataka as well, and the numbers came out. They notched up an EPS of about 2 rupees 27 paisa for just 1 quarter. whereas the previous quarter was just 31 paisa. So you see the huge difference which is made. The 637 crores of revenue was a significant jump over the 340 odd crores that they were clocking. This has catapulted the company into the league where I would believe at this run rate they could easily cross 10 rupees of EPS. And today it's available in its 50s.
Yeah.
It recently made a high of 58 as well, but it's still in that zone. You could buy this at current levels as on dips because this is in the next 2 years likely to be 3x of what it is today. So 150 is something which I am very comfortable with given the kind of promoter pedigree, the business it is in. And when you talk about electricity in every village in India, mind you, before the air conditioners and refrigerators come in, it will be the fans and the LEDs that will get consumed. So go for that. And the campaign on what is called switch to smart is really smart enough. And I believe that's really taken off in the right way. So it's no more paper profits. Orient Paper will deliver some decent earnings for everybody.
All right, Prakash, that point's well taken. I think there's a land bank as well as a bit of a sweetener in there. But let's get to our next pick then. And a lot of talk about that the ferrous space is going to do well, steel industry is going to do well. Ambarish is bringing us a pick that year to date, in fact, it's not really run up, but off late it's done decently well. But Ambarish, you believe it's the time to perform?
Possibly. But then before that, let me talk of the broader theme which I've been working on. Basically looking at the economy stocks, economy-based stocks, where the capacity utilization has been decently low. But despite that, they've been making profits. So looking at a scenario where the capacity utilization moves up and they make multiple times. But HEG is a bit different, the stock I'm talking about, because here they made a loss in the last quarter. Okay. And the capacity utilization was below 50%. In fact, they are the largest manufacturers of electrodes, which goes into steel making. And their capacity is about 80,000 tons. But then looking at the capacity utilization in the earlier years, for example, in FY15, it was about 73%. And they showed an EPS of 22 rupees. FY16, I mean the whole year, not the last quarter, the capacity utilization was about 70%, and they still made about 10 rupees. And much before that, FY13, they showed 78% of capacity utilization, and the EPS was 27. So just see the sort of multiple increase. So looking at that, in fact, I expect that possibly for FY17, we should see a decent turnaround, and FY18 should be much, much better. So, in fact, I'm looking at a price of about 320 for that stock, which is a very good return from the current levels.
Yes, indeed. Current price is 170, so 320 means a lot of upside. But our 8th recommendation comes in from DEVEN CHOKSEY. What do you have for us?
Sorry, Rima, I think, can you spell out?
No, I just wanted to know.
You want to speak now?
Okay, we wanted to know your second recommendation, and you've picked Sterlite Technology.
Thanks for that. Sterlite Technology has now become, I think, the Sterlite Telecom. It's a spun-off business which is basically out of earlier Sterlite Technologies. The listed entity right now is Sterlite Telecom. Why we have been liking this particular business? If you closely look at, I think, this particular company, in the telecom space, even when it was in a merge as a merged company, I think in the telecom space, this company has been growing very smartly. They have been growing at around 30% kind of a growth with ROC in excess of 21-22%, which in all likelihood is likely to be, I think, somewhere around 24-25%, and 30% growth kind of situation is likely to continue for this company. Purely a telecom company with a fiber optic and fiber optic cables, I think, which has probably now started shifting its gears into the different other territories. Last year they acquired a company called Elite Core Technologies, which is in the software solution providing business. They have a network connecting abilities, I think, which is again, I think, a solution business. So to a greater extent, and even I think the other activities like the NOFM projects of Government of India, wherein the fiber is extended to the remotest villages under the digitalization drive, the defense fiber laying down activities, and along with that the smart cities projects which are coming up, where this company has developed its ability to deliver solutions. So from pure product and product focused business, I think they are now into the solution business. I believe that I think it is a low capital intensive activity, and believe that I think this could possibly generate higher amount of rate of return. Probably I think this company could move in a direction of 30% CAGR kind of a growth over next 3 to 5 years. And that's where I believe that I think it could possibly command relatively better valuation than what it is at this point of time. Maybe once I think the full this quarter results gets declared out for telecommunication business, I think probably the investors' attention would get caught into this particular subject a little bit more in a focused manner. So I like this particular company from investment horizon of 3 to 5 years.
All right, Deven, thanks so much for that. So we're halfway through the show, but let's slip into a short break. When you come back, we'll get you more multi-bag ideas. Stay tuned.